Hey guys, Dave with Moniology here. Hope everyone's having a great weekend. This is the weekend market review from November 18th and 19th, 2017, where we take a look at some of the indices that are important to the markets from daily, weekly, and monthly perspectives to give us a better understanding of what's going on, where we've been, and where we're likely headed. So let's have a look at what's taking place in the markets today. So we start with the Treasury yield, and I'm just going to skip over here to the weekly and the monthly. So on the one hand, we've been in this bullish breakout here on 10-year Treasuries. We've broken out of this flag pattern over in the last couple of months, but now we're consolidating, and in my opinion, we're going to start to pull back here, probably to retest this from the upside, this breakout zone. So wouldn't be surprised if we head back to about the 20 to 21 area before eventually taking out the 25. Why do I say that? Because RSI seems to be struggling to get above that 60 marker on the weekly RSI, and we're starting to make lower highs, and so a test of the 50 possibly again to retest this breakout point from the upside is definitely in the cards. Looking at the monthly, here again, it's struggling to break out of this bullish flag pattern. It eventually will. Notice the Bollinger Bands are starting to curl higher, but there might be some monthly consolidation here for a little bit longer. So, by the way, this probably coincides with kind of my view that the indices themselves are looking primed for a 5, 10, 15% pullback in the not too distant future. Gold daily, well, it had a very, very nice spike. Not surprising considering our outlook. We had multi-week consolidation here. We had a double bottom here at the 1262 level, but we had divergence, positive divergence. Finally broke out here, and we're well above the 50 on the daily RSI. If we break above 1300, the next reasonable target is 1320, followed by eventually hitting 1360 in our opinion this year. MACDs look very strong, and gold is an area that you want to look at going forward. Similarly, on the weekly, we found support at the 50 on the weekly RSI. Now we're moving higher. That's a very, very positive and bullish development in gold. And gold monthly, here again, we retested the 50 on the monthly RSI successfully so far, and now we've been above that breakout point from this downtrend breakout since 2011, which we've been pointing out for a while now, and looks like now we're starting to move higher, and that's going to be a very, very positive development for precious metals. Taking a look at the daily high yield junk ETF, something we pointed out, this kind of weakness here that we're seeing not only in price but more importantly in momentum here. Even as price was making new highs, momentum was deteriorating. So this pullback here to this 36.25 level, no surprise. Bounce, no surprise either, but now we're meeting resistance at the 50 daily EMA as well as the middle Bollinger Band and the 50 on the weekly RSI. Expect this to not have much legs beyond where we are today, and eventually move lower to test this 35.75 level, and we'll see what happens at that point. Also, RSI MACDs are looking to curl above zero, but our opinion is they're probably going to curl back down as they approach zero, and we'll see what happens. On the weekly chart, so far it was a very, very bullish hammer pattern, but again, we're below the 60 level. Let's see what happens as the 60 is retested, possibly to the upside. Ultimately, we think that 50 on the weekly RSI is going to be tested, and how it does there will determine whether this is a short-term pullback or we head towards that 34, possibly breaking below the 200 EMA for a little bit, around 33 as well. We think we're headed lower in junk bonds, and this is kind of one of the areas that you really want to look at to see what the health of the actual economy is, and things look to be let's put it this way, correcting. And on the monthly level, so far it's just a slight negative candle. We're very, very overbought, and if we break below that 70 level, that's a sign that we might have a little correction to that 60 level, or again on the 50 on the monthly RSI. No big deal from a long-term perspective, but if you're just buying now, there might be a little bit of pain in the short term. Crude oil daily, beautiful retracement, as we called it, towards the 55 level. We thought we might go as low as 53. It's still possible, but at this point we found support at the middle Bollinger Band on the daily. Nice hammer pattern. We found support at the 60 RSI level, and looks like we want to head higher and break above that 70. If that happens, expect that 58 level to be broken very soon. Taking a look at crude oil weekly, the level to watch is that 69.70 on our RSI. That'll probably coincide with that 60 price level, but we think we're going to get there and likely break above that eventually and hit a high of 65 at some point this year. So crude oil still has some significant upside. Use these opportunities at this point over the last couple of days to add to positions or initiate new longs. And again, this is the inverse head and shoulders we've been pointing out for a while here on the monthly, and this just looks picture perfect. And eventually we think that oil is starting a new uptrend, a new bull trend. Not yet, you can't call this a bull trend yet, but if this breaks above the 60 and confirms this inverse head and shoulders, breaks above that monthly EMA of about 59, that's a very, very positive development. Then there's a 200 monthly EMA of 62. At that point, you break above those two levels, and you're gonna go towards 70 or 80 in probably the next 12 months. Nasdaq is showing some signs of deterioration. We're kind of hitting all-time highs, but momentum is waning. That's kind of what we saw on the RSI, and that's typical what you see of pullbacks. So pullbacks in a corrective like 10% type pullback. So let's see what happens, but something to be wary of. If I'm long, I want to be trimming my positions, or possibly, depending on my strategy, getting out of those sectors altogether. But the weekly looks great, and until that turns around, there's no reason to run for the exits at this point yet from a weekly standpoint. Monthly looks fantastic, but very overbought. The bearish wedge has broken to the downside. We're retesting it from the upside, and remains to be seen what happens. But I think ultimately we'll break lower to head towards that 5200 area for a little corrective move. Russell 2000. I've been pointing out the weakness in the small caps. It's had a nice couple of days of bouncing, but resistance probably around the 1500 area is very likely, and I think things are going to go lower from that point. Russell weekly. So far we found support around the 60 on the weekly RSI. That's a good development for bulls, but if it can't hold that 1450 level, expect price to move lower eventually, probably retracing towards that 1300 level on the Russell. And taking a look at the monthly, the monthly is broke down below the wedge, and now looks like it's retesting it from the upside, from the downside, but ultimately we think that this is going to prove to be a corrective development here, and that RSI 70 level is very, very big point of resistance. Why? Because this is the point where we broke down last time around, and it was the area that we broke down in 2008 right here. And so now we're reaching this point. We're making all-time highs, but we're actually creating negative divergence on a monthly towards areas past. So it's something to definitely be cognizant of as we move higher. The S&P daily continues to diverge and show weakness on the RSI. Taking a look at the weekly, nothing yet to see, but we had 2 weeks of negative weekly price action. So let's see what happens next week. And finally, we're going to look at a couple last charts. S&P monthly looks fantastic, but again, looking at the daily and the weekly, there are some clouds on the horizon. Looking at the US dollar. The US dollar is one that we've been calling very accurately, and it's starting to roll over after this bounce. This bounce was not a surprise for us. For those of you who've watched past videos, now we're rolling over and we're heading back towards that 90 level, and this is a very bearish price action on the dollar. We couldn't break above the 50, no surprise, which is a very strong resistance level. We'll probably bounce once we hit that 38 level for just a little bit, and then ultimately roll over. Like we've been pointing out, we think that we're headed towards that 87.50 level on the dollar, followed by 80, and that'll be a boom towards the commodities and precious metals sectors. Looking at volatility, volatility is broken out, and it's broken out to the upside, certainly on the daily, and now it's flagging again. Look to see some continuation patterns towards 16 level, possibly 20 in the coming weeks. We're above 50 on the weekly RSI. That's a very, very positive development for volatility bulls. And although we kind of retraced after hitting this trend line, we think that this is ultimately going to break here and likely head towards that 22.50 to possibly 30 level on what we believe will be impending correction. All depends on how we do on the monthly here. So far we're up 12% on the monthly volatility. If we can break above 50, I mean, this can really run. This bullish flag that we've been kind of painting here likely can take off very quickly. A lot of short selling on volatility, and if those shorts have to cover, that could be the move that causes a lot of folks to get out of the markets. The world stocks have been kind of in a corrective mode already for the last couple of weeks, and they bounced a little bit, but we think that they're starting to roll over again. Notice this uptrend was broken. Now we're rolling over here. We think that this is ultimately going to test that 1800 level, and looking at the monthly, 1800, 1900 level is probably the first very strong support, but ultimately possibly on a corrective move all the way down about 1550. So we'll see what happens. Ultimately, looks like there are some areas that you want to stay away from in terms of the overall major indices. Oil, gold look good at this point, and you want to start looking at individual names again. And that's about it. So good luck with your trading, guys. Please follow us on StockTwits and at Twitter at Moniology. And for those of you who can, please support our work on Patreon. There's a link in the show notes. $10 a month goes a long way to helping us create better videos more often. Thanks, and have a wonderful week.